Florida home prices aren't acting the way most people expected. People thought the combination of higher interest rates, rising insurance premiums, and slowing migration would cause prices to crack, or at least soften. But what's actually happening is more complicated, and honestly, more interesting. The biggest surprise is that the trends driving Florida's housing market right now aren't even the ones people are talking about. It's not just interest rates, it's not just insurance, and it's definitely not just inventory. Analysts from CoreLogic, Redfin, Zillow Research, the Federal Reserve, and Florida Realtors are all looking at the state, and the conclusions aren't lining up. That ironically tells us more than if they had actually agreed with each other.
What's wild is that whether you're looking in Miami, Tampa Bay, Orlando, Jacksonville, Sarasota, Naples, Pensacola, or the Space Coast, every region behaves like its own mini country. Miami is essentially a global finance hub that operates like New York City with palm trees. Tampa is becoming a tech and finance hybrid. Orlando is anchored by tourism and jobs from the theme parks, and Jacksonville is driven by logistics, military, corporate expansions, and lower cost of living. Sarasota and Naples have luxury buyers who simply don't react to interest rates the way first-time home buyers do. And then you have the Panhandle and Space Coast surges driven by defense, aerospace, and manufacturing. When analysts look at Florida, they're not looking at one market, they're looking at 12, which is why predictions vary so much.
And here's the hook. Some analysts say Florida home prices will drop in 2025-26. Others say Florida prices will rise modestly. Some say they'll stay flat. Not confusing at all. None of them are agreeing, but every single forecast uses real numbers that point to very different outcomes depending on the county. Here's where viewers should lean in. The data tells a story, but the story has multiple plot twists depending on your region. Florida has more plot twists than any other state because of insurance, migration, supply constraints, climate factors, and the sheer diversity of buyer types.
So let's start with the big question everyone Googles. Will Florida home prices drop? This exact phrase gets tens of thousands of searches every month. And analysts are watching the Florida market so closely because Florida has done something almost no other state has done. It sustained price growth during the most aggressive rate hikes in modern history. According to the Florida Realtors statewide data, the median sale price for single-family homes rose again year over year, even through high interest rates. And this is where analysts start fighting with each other. Some say this can't continue. Others say it absolutely can because demand still exceeds supply in most metros.
To understand where Florida home prices are heading, analysts break the data into 6 major forces: inventory levels, migration patterns, insurance costs, interest rates, construction pipelines, and regional job markets. And depending on which of these factors an analyst weighs more heavily, their prediction can change. This is why CoreLogic says Florida's prices may soften slightly in certain metros, but rise in others.
Let's break them down, starting with inventory, because this is the backbone of every prediction. Florida's inventory is rising, but only in certain metros. Redfin shows that active listings in Tampa, Jacksonville, and parts of Orlando have climbed modestly. However, places like Miami, Sarasota, and Naples still have critically low levels, especially in desirable coastal areas. In the analyst world, inventory is everything. If inventory spikes and demands soften, prices drop. If inventory stays tight and demand remains strong, prices stay high.
Tampa Bay currently has around 3 to 3.5 months of inventory depending on the county. That's still technically a seller's market, though not at the frenzy levels we saw in 2021 and 2022. Jacksonville is around 3 to 4 months of inventory, which is more balanced, but still not enough to force price cuts across the board. Orlando hovers around 2.5 to 3.2 months of inventory, depending on which suburb you're talking about. Miami is closer to 2 months in many of their neighborhoods, and in some coastal luxury zones, it's closer to even 1 month. Well, what about Naples? Naples is its own planet altogether. Inventory in the luxury segment is rising, but demand is still so deep in the upper price ranges that it's not causing a downward pressure yet.
Here's the hook. Florida would need 6+ months of inventory to reliably push prices down. And no major Florida metro is anywhere near that. Some areas may flatten, some may dip slightly, but statewide price drop requires inventory levels to double. And right now, that isn't happening.
Let's talk migration, because this is the wild card. According to the U.S. Census, Florida continues to be the #1 destination state for relocations from New York, New Jersey, California, Illinois, and Pennsylvania. And in international buyers from Latin America, Europe, and Canada. And Florida has a pipeline of demand that's incredibly resilient. But here's the twist. Migration into Florida has slowed from the peak of 2020 to 2022. It hasn't stopped, but it has slowed. The Florida DEO shows population growth is still positive, but at a more normal pace. Analysts who believe prices will drop are basing it on this declaration, not even an actual reversal.
Insurance is the part that everyone keeps citing as the reason why Florida prices will crash, but the data isn't showing that yet. Insurance increases have moderated. Premiums are still high, but the runaway spiraling has cooled. Some analysts argue that the insurance burden will push prices down. Others argue that buyers have already adjusted their expectations. The truth? Insurance is shaping where buyers move, not whether they move.
Interest rates are the next big piece. And here's where analysts disagree the most. Some forecasts expect slightly lower mortgage rates in 25-26. If rates fall, Florida demand is going to explode again.
Yes.
If they stay higher for longer, demand stays stable but not frantic. This is why predictions adjust into two different camps. Camp A, prices will rise slightly. Camp B, prices will drop slightly. Even the downside group forecasts only small dips but not a crash.
And here's where every viewer should lean in. Even the analysts predicting price drops say the drops will be minor, not a collapse. Most models point to 2 to 7% declines in the most stretched markets, not the 20 to 40% crash narratives floating around YouTube. Moody's lists certain pockets like Cape Coral, parts of Tampa, and parts of Orlando as 10 to 20% overvalued, but that just means future growth slows, not reverses.
Construction's another huge factor. Florida has an enormous construction pipeline, but here's the twist. Builders focus on where land exists. Land exists inland, not on the coast. So inland markets like Wesley Chapel, Lakewood Ranch, Horizon West, St. John's, and Port St. Lucie are seeing explosive new construction. But coastal markets like Naples, Sarasota, Barrier Islands, Miami Beach, Fort Lauderdale waterfront, and Jupiter can't build enough to ease demand. Analysts who say prices will rise point directly to this construction bottleneck.
Jobs are the last major piece. Florida's job market is one of the strongest in the country. Unemployment consistently comes in below the national average. Tourism, healthcare, logistics, manufacturing, tech, defense, they're all expanding. This is why some analysts lean towards mild price appreciation instead of declines.
Here's a big takeaway. Analysts disagree not because Florida is unstable, but because Florida's housing market is too diverse to behave like a single system. Some metros may see slight declines, some may flatten, some may rise. Florida's question isn't, will prices drop? The real question is, which markets soften and which markets remain bulletproof? And that's exactly what we're breaking down next for you.
Let's get into what people really came for, the metro by metro breakdown. Because Florida doesn't have one market. It has regions acting like entirely separate universes. A price dip in Cape Coral doesn't mean a price dip in Palm Beach. A cooling in Orlando doesn't touch Naples. A surge in Sarasota doesn't mean anything for Jacksonville. This is where analysts get tangled up because they try to generalize Florida, and Florida refuses to behave like one state.
Let's go ahead and start with Tampa Bay because analysts are watching it closely. Tampa is one of the metros where some predict a mild softening while others predict a mild growth. Inventory is rising more here than in certain other Florida regions, but it's still not enough to flip the market. It's stabilizing, it's not failing.
Tampa is the perfect example of balance instead of collapse. You'll see price adjustments in neighborhoods where new construction competes directly with resale, like Wesley Chapel, Riverview, and Ruskin. But in places like Hyde Park, Davis Island, and Safety Harbor, price remains stubbornly high because land is limited and demand stays strong.
Now let's swing on over to Orlando, one of the most misunderstood markets in the state. People think Orlando, they think theme parks. But the economic backbone includes Lockheed Martin, Advent Health, Siemens, and UCF. Orlando's median price continues trending upward year over year, but some outer ring suburbs may see 2 to 6% softening because they grew too fast, too quickly. Core areas like Winter Garden, Lake Nona, Dr. Phillips, and Maitland remain extremely resilient.
Now let's talk Jacksonville, another market analysts misuse in their predictions. Jacksonville has more land than Tampa or Miami, and builders are active, but demand is matching supply. The job market is booming, corporate expansion keeps coming, military population stabilizes everything. Inventory around 3 to 4 months is neutral, but far from a buyer's market. Analysts expecting Jacksonville to drop. Forget, it's still one of Florida's most affordable metros.
Now let's shift to Miami. Miami is a housing market analysts cannot agree on literally at all. Some say it's overvalued, some say it's unstoppable. Here's the truth. Miami doesn't behave like a typical US city. Interest rates barely matter because the high cash purchases. Insurance barely impacts the ultra-luxury segment, and demand from Latin America, Europe, Canada, and high-income U.S. buyers remains massive. Inventory around 2 months keeps upward pressure on prices, so scarcity plus global demand equals price stability.
Now, Sarasota and Bradenton. This market is fascinating because it defies textbook logic. On paper, Sarasota looks overvalued. In reality, Sarasota has some of the deepest, most consistent luxury demand in Florida. Lakewood Ranch remains one of the top-selling master plan communities in the entire country. Inventory often sits below 2 months in the most coveted areas. Analysts expecting Sarasota to drop misunderstand the buyer pool.
Naples behaves the same way, but with even deeper pockets. Naples buyers pay cash. Naples buyers want second homes. Naples buyers aren't deterred by insurance adjustments. This market rarely reacts to economic nervousness the way others do. That's why predictions show Naples continuing modest growth while other areas continue to flatten.
Now let's look north to Tallahassee. Tallahassee is about stability, not volatility. Government jobs, university jobs, healthcare. This area doesn't boom or bust, it glides. Analysts consistently put Tallahassee in the flat to mild appreciation category.
Gainesville is the same way.
Yep.
Anchored by UF Health and biotech, high rental demand, steady population, slow, consistent appreciation, not a boom bust market.
And then the Space Coast. Very exciting. Cape Canaveral, Cocoa Beach, Melbourne, Palm Bay. This region is exploding because of aerospace. SpaceX, Blue Origin, NASA, Northrop Grumman, L3 Harris. Jobs plus population equal price support.
Now let's talk about a market analysts do flag for slight declines. Cape Coral and Fort Myers. Hurricane Ian left a huge impact. Insurance concerns are lingering. Some homes were overvalued, inventory increased. Some expect mild dips between 2 to 8% in certain neighborhoods. It's not a collapse, but it is a correction, a big one.
Next, we have Pensacola and the Panhandle. This area behaves differently due to military, tourism, and affordability. Prices surged during the pandemic. Now they've stabilized. Most forecasts show flat to moderate appreciation.
Then we have the wild card markets, the places analysts can't figure out correctly. Port St. Lucie, Palm Bay, Deltona, Daytona, Lakeland, Winter Haven. These markets grew explosively, but demand hasn't disappeared. Analysts predict mixed results, slight dips in some areas, slight increases in others.
So let's summarize for the viewers. Analysts don't disagree because Florida is unstable. They disagree because Florida is too diverse for one prediction. Some markets soften, some markets stabilize, some climb. Florida is a collection of micro markets, and each one is driven by completely different forces.
The real story is that Florida's housing market is reshaping. It's not retreating. Strong metros push forward. Stabilizing metros hold their ground. Pockets of oversupply see micro corrections. And markets with global wealth and scarcity stay bulletproof. All right, buckle up, because this next section is where the numbers get spicy. One of the biggest tools analysts use to forecast price direction is something called overvaluation maps. These maps come from Moody's Analytics, CoreLogic, and Florida Realtors regional reports. They label metros as undervalued, fairly valued, or overvalued based on how fast prices rose relative to incomes, job growth, and rental rates. And Florida is basically the poster child of overvaluation. Several Florida metros sit on the 10 to 30% overvalued range. But, this is a huge but, overvaluation does not automatically equal price drops. It simply means the market's long-term appreciation might slow down.
Overvaluation does not mean a crash is coming. It means prices climbed faster than fundamentals. Cape Coral, Port St. Lucie, and Northport look overvalued on paper, but they were also undervalued for years before the pandemic surge. People fled high-cost northern metros and pushed prices up fast. We say that all the time. But that doesn't mean prices now collapse. Compare that to Miami. Miami also looks overvalued on paper, but it's not vulnerable in the same way. Because demand there comes from global wealth, not local incomes. Income fundamental matters less when buyers are not using local paychecks to buy homes.
Let's talk about insurance, the topic everyone doom scrolls about. People claim rising insurance will be the reason Florida crashes, but the data just doesn't support that. Insurance premiums are still high, yes, but the increases we saw from 2020 to 2023 have slowed. In fact, some carriers are lowering rates on newer, well-maintained homes. Analysts who predicted price drops were assuming insurance would keep skyrocketing at the same pace, and that just hasn't happened. Insurance reform, reinsurance stabilization, and market correction changed the trajectory. Insurance affects where people buy, not whether they buy.
Insurance doesn't crash a market unless it creates forced selling. And that isn't happening. What we're seeing instead is migration within Florida. People choose inland over coastal, newer homes over older ones, townhomes with lower premiums, communities with newer roofs, elevated lots, better wind mitigation. People shift neighborhoods, not states. Insurance changes zip codes more than it changes statewide pricing.
Now we need to talk about something very few analysts mention. Florida's 5 risk zones for price stability. This is based on overlapping data from Redfin, CoreLogic, Florida Realtors, and census migration patterns. Let's go ahead and break them down for you. Zone 1 is high risk price pressure. Those areas are Cape Coral, Northport, parts of Orlando and the outer ring suburbs, some Tampa suburbs, Daytona Beach inland, Port St. Lucie inland pockets. These areas saw enormous growth, insurance pressure, and oversupply. Zone 2 is medium risk stabilization. These areas are Lakeland, Winter Haven, Deltona, DeLand, Ocala, Palm Bay, Pensacola suburbs, Tallahassee outskirts. These are stable markets, but not high-income migration magnets. Zone 3 is your balanced markets. These are Tallahassee, Gainesville, Pensacola core, North Jacksonville, Kissimmee core, Space Coast inland. These stay flat to mild growth. Zone 4 have strong growth markets. These are Jacksonville suburbs, Orlando core, Tampa, St. Pete coastal areas, Space Coast aerospace corridors, Sarasota mainland, Lakewood Ranch. The demand in these areas stays deep, which brings us to Zone 5, which are ultra-strong fortress markets like Miami and Naples, Palm Beach, Sarasota Barrier Islands, St. Pete waterfront, Boca, Key Biscayne, Fisher Island. These markets are wealth-driven, landlocked, and nearly immune to the dips.
Next, let's talk about the interest rate trap. Some analysts assume falling mortgage rates will push prices down because more sellers will list their homes. But in Florida, that logic doesn't hold. If rates fall, demand in Florida spikes instantly. Thousands of buyers are sitting on the sidelines waiting for a rate drop. Lower rates don't create oversupply here. They create bidding pressure. Florida would need a massive inventory surge to offset a demand spike. And that surge just isn't happening.
Another myth we're going to have to debunk is the migration slowdown narrative. People keep saying migration to Florida is slowing as if that means prices are falling. Migration is not slowing. It's normalizing. And normal for Florida is still enormous. Florida continues to rank near the top for net inbound migration. But analysts often miss the nuance. Migration is shifting geographically. It's not disappearing. It's redistributing.
Exactly. New Yorkers aren't only moving to Miami anymore. Californians aren't only moving to Naples. Chicago relocators aren't only choosing Lakewood Ranch. Migration is spreading into lots of areas like Palm Coast, Port Charlotte, Claremont, Palm Bay, Riverview, Apollo Beach, St. Augustine, Fernandina Beach, Pensacola. Insurance didn't push people away from Florida. It pushed them across Florida.
Now let's address specific neighborhoods analysts say are likely to soften. The Orlando risk neighborhoods are Kissimmee, short-term rental zones, Horizon West, outer edges, Deltona, Davenport, and parts of Apopka. The Tampa Bay risk neighborhoods are Pasco County, the new construction corridors, Riverview, Brandon new builds, Wesley Chapel outskirts, Sun City Center, and Ruskin. Jacksonville risk neighborhoods are Argyle, West Side, parts of Middleburg, and parts of Nassau new builds. Now, Cape Coral and Fort Myers, they still are the most consistently flagged metro for potential dips.
Now, let's flip it to neighborhoods expected to rise or stay strong.
All right, this is a better list.
In Miami, we have Brickell, Coconut Grove, Coral Gables, Key Biscayne, Edgewater, Sunny Isles, and Doral. The Tampa Bay area has Hyde Park, Davis Islands, Safety Harbor, St. Pete Waterfront, and Seminole. In Orlando, we have Lake Nona, Winter Garden, Dr. Phillips, Maitland, and College Park. In Jacksonville, we have Nocatee, St. John's, Julington Creek, the Beaches area, and Amelia Island. Moving over to Sarasota, we have Siesta Key, Bird Key, Longboat Key, Lakewood Ranch, and downtown Sarasota. Moving on to Naples, we have Park Shore, Pelican Bay, Vanderbilt Beach, Old Naples, Golden Gate Estates, the newer construction. These areas are where demand is deep and does not flinch.
Florida's demand pipeline is unlike any other state. Retirees, snowbirds, international buyers, high-income relocators, investors, military, aerospace workers, corporate expansions, remote workers, second home buyers, tax-motivated movers, cash buyers. This pipeline creates stability analysts consistently underestimate.
The bottom line is simple. Florida isn't showing signs of a crash. It's showing signs of a reshuffle, a stabilization, a zip code by zip code recalibration. Some areas dip, some areas flatten, some grow, but Florida doesn't move as one market. And that's exactly why predictions vary so much.
Let's jump into one of the biggest misunderstandings about Florida real estate, the idea of an affordability ceiling. Analysts who predict price drops often say Florida has hit its affordability limit. But that only makes sense if Florida buyers were relying solely on local wages, and they aren't. Florida has one of the highest shares of out-of-state income in the entire country. Incoming households bring far higher median incomes than existing residents. This matters because affordability ceilings only work when local incomes set the buying power. But Florida's prices are being shaped by incomes from New York, New Jersey, Illinois, Massachusetts, and California, not just Florida wages.
A lot of people are working remotely. Analysts who treat Florida like Ohio, Indiana, or North Carolina miss the point. Florida home prices aren't being driven by local affordability. They're being driven by differential affordability. Someone selling a $900,000 home in Long Island who buys a $550,000 home in St. Augustine isn't stretching. They're upgrading and pocketing the money. And this is where the equity wave comes in, one of the most important but least discussed forces supporting Florida pricing. U.S. homeowners gained trillions in equity from 2012 to 2022. Many of those homeowners are now migrating to Florida with that equity.
When someone arrives with $300,000 to $800,000 in equity, they aren't sensitive to interest rates or small price fluctuations. They buy what they want. This is why analysts from Redfin, Zillow, and CoreLogic consistently highlight Florida as one of the states least vulnerable to a large price correction. These buyers are insulated from economic jitters.
Now, let's talk cash buyers, and there are a lot of them here in Florida. Another stabilizing force analysts tend to underestimate. Florida has one of the highest cash buyer rates in the United States. In markets like Naples, Sarasota, and Miami, cash buyers make up 45 to 60% of purchases. Statewide, Florida routinely sits above 30% cash. Cash buyers change everything. Cash buyers are interest rate proof. Cash buyers stabilize prices. Cash buyers aren't deterred by insurance fluctuations the way finance buyers are, and they often bid aggressively for the homes that they want.
So let's go deeper into something analysts really quantify: affordability relativity. Florida is expensive for Floridians, but is still cheap for people coming from Los Angeles and San Diego, Seattle, New York City, Boston, and even Chicago. A 1,200 square foot condo in Queens sells for $650,000. A 2,800 square foot new construction home in Jacksonville sells for $565,000. A tiny bungalow in San Diego sells for $1.3 million. A luxury lakefront home in Orlando may be $850,000. Florida is expensive compared to its past, but it's still cheap compared to the states fueling its migration.
Now, let's talk about something analysts whisper about but rarely publish. Companies are still moving jobs to Florida. Corporate relocations, regional expansions, technology hubs, financial firms, healthcare growth, which there's a lot of here of that, aerospace expansion. Just in the past few years, Florida has attracted major companies such as Citadel, Blackstone, Wells Fargo, Lockheed Martin, Amazon facilities, Publix expansions, L3 Harris, and SpaceX related contractors. These jobs bring high-income workers, which push demand even further.
Let's pivot into insurance, because analysts still attempt to use this as the main argument for future price declines. Insurance does not destroy demand. Insurance reshapes it. Buyers move away from older coastal homes with high premiums. They move towards newer inland homes, homes with updated roofs, homes with higher elevation, townhomes with lower premiums, condos with healthier reserves, communities built after modern building codes. Insurance causes migration within Florida, not out of Florida.
Another major force that analysts underestimate is new construction, which is booming here in Florida. Builders absorb buyer anxiety. They offer incentives, rate buy downs, closing cost credits, upgrade packages, which help keep demand flowing. More importantly, new construction meets current wind load and elevation standards, making insurance more affordable. Buyers love certainty and builders provide it. This draws a steady stream of buyers towards newer communities, keeping those areas price stable.
Let's shift over to the 5 catalysts analysts say could push Florida prices up between 2025 and 2027. Catalyst 1, mortgage rate normalization. When mortgage rates fall into a mid 5% range, thousands of buyers sitting on the sidelines re-enter the market. Florida reacts strongly to rate improvements. Catalyst 2, corporate relocations. This directly boosts demand in Tampa, Jacksonville, Orlando, Miami, and Space Coast. Catalyst 3, continued inbound migration. Even normal level migration is enough to sustain pricing. Florida does not need pandemic level migration to stay strong. Catalyst 4, return of international buyers. Travel has normalized. Foreign wealth seeks stability. Florida is viewed globally as a safe asset. Catalyst 5 is inventory shortage. Even with strong construction, Florida remains short on supply. The inventory gap is structural, not cyclical.
Now, here are the 5 catalysts that could push prices down in certain metros, not statewide, but locally. Risk factor number 1, rising insurance for older homes, especially in Southwest Florida and portions of the East Coast. Risk factor number 2, overvaluation in fast growth metros, Cape Coral, Port St. Lucie, Northport. Risk factor number 3, construction oversupply, Pasco County, Lakeland, parts of Ocala. Risk factor number 4, slowing migration from key feeder states. If relocation from New York or California slows more sharply, demand could soften. Risk factor number 5, condo reserve laws. Older condo buildings may experience price dips due to mandatory assessments.
So bringing it all together, everything we said, Florida prices aren't driven by one factor. They're driven by the interaction of migration, insurance, inventory, equity, cash buyers, job growth, new construction, regional differences, and global demand. Florida doesn't behave like a single housing market. It behaves like multiple markets with entirely different roles. Some markets will boom, some will flatten, some will see mild dips. But Florida as a whole is not entertaining a collapse.
And that's exactly what part 5 is about. Who is actually buying? Who is actually selling? And how those people determine Florida's price direction more than any spreadsheet or forecast model ever could. Let's jump straight into the biggest question most analysts overlook. Who exactly is buying homes in Florida right now? Because understanding the buyer pool tells you more about future pricing than any interest rate forecast or insurance chart. Florida has a completely different buyer demographic than most states. Florida is powered by 5 dominant buyer groups, and each one influences prices differently. This breakdown isn't talked about enough, but it explains why some markets climb while others flatten. Let's start with the first, the buyer group with the most power. Buyer type number 1, high equity relocators ages 45 to 70.
Okay.
These are people coming from New York, New Jersey, Massachusetts, Illinois, California, Virginia, Washington, D.C., Connecticut, and Maryland. They're selling $700,000 houses up north, or a $1.2 million California home, or a $950,000 New Jersey property, and arriving with tons of equity. These buyers change everything. They aren't financing 97% loans. They aren't stretching every dollar. They aren't reacting to interest rates the same way. They buy what they want. They pay cash often. They bid aggressively in desirable zip codes. This group stabilizes pricing in Palm Beach, Naples, Miami, Sarasota, Orlando's affluent suburbs, St. Johns County, Tampa coastal neighborhoods, Jacksonville beaches, and Amelia Island. These regions don't fall easily because this buyer group doesn't flinch.
And analysts underestimate how strong this group is. The equity wave, the trillions in home equity Americans gained since 2012 plays a major role here. That equity moves with them to Florida. It doesn't evaporate. It doesn't shrink. It comes here and buys houses. Now we get into another group analysts misinterpret. Buyer 2, remote workers and lifestyle migrators. These are the people who realize they don't need to live in expensive cities anymore. They're coming from Chicago, Seattle, San Jose, Los Angeles, Denver, New York City, and Boston. They want sunshine and lower taxes and bigger homes. This group surged during the pandemic, but contrary to some analyst claims, they didn't disappear. They stabilized and they're still coming. Remote workers tend to choose Tampa and Orlando and Jacksonville, St. Pete, Sarasota, the Space Coast, Gulf Breeze, Pensacola, Delray, Boca, and Fort Lauderdale. This buyer group doesn't buy because market conditions are perfect. They buy because their lifestyle has changed.
Then we have buyer type number 3, retirees and near retirees. People retiring in Florida aren't focused on interest rates. They're focused on lifestyle. They want walkability, medical access, golfing, beaches, sunshine, and lower taxes. Retirees choose Naples, Sarasota, the Villages, Palm Coast, St. Augustine, Fort Myers, Bradenton, Ormond Beach, Delray, and Vero Beach. Retirees are one of the strongest price-supporting demographics because they bring cash, not debt.
Now here's where it gets even more interesting, the type 4 buyer, which is the international buyers. This group collapsed during the pandemic due to travel restrictions, but they are back. And in some regions, they're stronger than ever. Florida accounts for a massive share of international buyers in the entire United States. This group dominates Miami, Miami Beach, Sunny Isles, Orlando short-term rental zones, Fort Lauderdale, Tampa investment corridors, Naples luxury, Sarasota's coastal condos. These buyers are often cash heavy and highly motivated by currency exchange benefits, investment securities, lifestyle, and political stability. Their presence strengthens demand in key metros even when rates rise.
And now the final group, buyer type number 5, investors large and small. Florida is an investor magnet. Short-term rentals, long-term rentals, institutional buyers, small landlords, multi-unit investors, vacation home buyers. Here's the twist. Institutional investors slowed down, but small investors didn't. Independent investors are still active because Florida rents have grown faster than many other states. Investors swoop in when a neighborhood dips 3 to 6%, preventing deeper declines.
What about sellers, the part analysts always miss? Buyer type matters, but seller types matter just as much, and analysts rarely talk about them. Florida has 4 dominant seller types, and these groups strongly influence whether prices fall. Seller type 1 is the low pressure sellers. People selling because they want to, not because they have to. Maybe they're downsizing or upsizing or switching school districts, moving closer to family, seeking lifestyle upgrades. Low pressure sellers have no motivation to slash prices. They'd rather wait than sell low. Seller type number 2 has high equity sellers. These are sellers who bought more than 7 years ago and have huge equity cushions. They don't panic. They don't rush. They rent the home out if the price isn't right. This stabilizes inventory. Then we have seller number 3, the new construction sellers. Builders releasing inventory, but this group competes strategically with pricing. They don't want to drop resale values. They offer incentives instead of price cuts, rate buy downs, closing costs, upgrades. Incentives prevent market-wide price reductions. So brings us to type 4 now, which are distressed sellers. This group is really small in Florida right now. Florida is not seeing a foreclosure surge, not even close. Foreclosure activity is below 2019 levels. This eliminates a major downward force.
Exactly. Florida does not have the distressed inventory required for a price drop cycle. To force prices down, the market needs job losses, high foreclosures, high forced sales, high distressed listings, and Florida has none of those.
Here are the zip codes with mild downward pressure. Cape Coral, 33909, 33993, 33991. Port St. Lucie, 34953, 34983. North Point, 34286 and 34287. Pasco County, 33545 and 33558. Orlando suburbs, they're seeing it in 34747, 32703, 33837. Daytona Inland has 32124, 32117. Those areas have rapid new construction, insurance pressure, higher days on market, and higher price reductions.
Now, these are the zip codes showing strong pricing resilience. In the Miami-Dade area, 33131, which is Brickell, 33143, which is Coral Gables, 33149, which is Key Biscayne, 33139, which is Miami Beach. In the Naples area, we have 34102, which is Old Naples, 34103, which is Park Shore, 34108, which is Vanderbilt Beach. And in the Sarasota area, we have 34236, downtown Sarasota, 34242, Siesta Key, 34228, which is Longboat Key. And in the Tampa and St. Pete area, 33606, which is Hyde Park, 33704, which is Snell Island, 33701, which is downtown St. Pete. And in Jacksonville, we have 32259, which is St. John's, 32081, which is Nocatee or Ponte Vedra, 32250, which is Jax Beach, and in Orlando, 32827, which is Lake Nona, 34787, Winter Garden, 32804, College Park. These areas have scarcity, high-income buyers, strong schools, walkability, lifestyle amenities, low inventory, and cash-heavy purchases. They are the least likely to decline.
This is where analysts surprisingly agree. Florida is entering a new cycle, not a crash. Here is the consensus cycle. 2024 and 2025 stabilization, localized dips, localized appreciation, inventory normalizes, migration continues, insurance reshuffles demand. 2025 and 2026, we're going to see interest rates fall, demand picks up, international buyers increase, prices rise in strong metros. 2026 to 2028, strong price growth resumes in most metros. Florida re-enters steady appreciation. Inventory remains below demand. Boomer and Gen X equity keeps prices supported. Corporate relocation accelerates. Cycle is boring compared to the crazy 2022 era, but boring is stable.
And stable keeps Florida from experiencing a crash. Florida is entering a normalization cycle, a rebalancing, a zip code shuffle, a price plateau in some areas, a steady climb in others.
But here's the bombshell. Florida has a price stability force almost no analyst models correctly. Aging demographics. Florida is aging faster than the national average. Retirees don't foreclose at high rates and they buy with cash. Retirees stay put. They downsize within the state, not out of it. This creates a price floor. And it's a big reason why the analytics predicting big price drops keep being wrong. Let's get into the part almost every analyst gets wrong. The psychological drivers of Florida's demand. Predicting home prices isn't just math, it's mindset, it's behavior, it's emotion. Florida doesn't just sell houses, it sells a lifestyle people dream about for years before making a move. When people ask, will Florida home prices drop? What they're actually saying is, will demand weaken? Will fewer people want Florida? Will the dream fade? And every single metric points to one answer. Not even close. Every study from Zillow to Redfin to the U.S. Census lists Florida as one of the most desirable destinations in America. And desire fuels demand, even when prices rise.
People don't move to Florida for a discount. They move for sunshine, lower taxes, no state income tax, outdoor lifestyle, beaches, boating, golf, pickleball, 24/7, warm winters, job opportunities, retirement benefits. Those factors aren't disappearing. If anything, they're strengthening. This creates what we call the Florida paradox. As Florida becomes more expensive, more people want to live here. It defies logic, but not psychology. People want to live where other people want to live. When an area becomes popular, it feeds itself. More people relocate, more companies expand, more restaurants open, more infrastructure develops, more international visibility grows, more investors show up, more retirees consider it. More remote workers choose it. This feedback loop is why price declines are hard to trigger.
Now let's answer the question directly. Is a Florida housing crash mathematically possible in 2025 or 2026? To trigger a 20 to 40% crash, Florida would need massive inventory spikes, huge job losses, large numbers of forced sellers, high foreclosure rates, over-leveraging, negative population growth. No. Now let's compare those requirements to actual data. Inventory is rising, but nowhere near the 6 to 9 months needed for price drops. Most metros sit at 2 to 4 months. Job growth is among the strongest in the nation. Unemployment remains low. Foreclosures are below 2019 levels. Homeowner equity is near record highs. Population growth is still positive. So in conclusion, a crash is mathematically impossible without major economic deterioration that is just not present.
Now, let's break down the 7 biggest mistakes people make when predicting Florida home prices. Mistake 1, treating Florida as one market. It's 15 unique markets under one state flag. Mistake number 2, ignoring out-of-state wealth. Local affordability does not set prices. Inbound wealth does. Mistake number 3, underestimating cash buyers. Cash doesn't react to interest rates. Mistake number 4, overestimating insurance impact. Insurance changes zip codes, not statewide prices. And mistake number 5, misreading overvaluation charts. Overvaluation means slower growth, not guaranteed declines. Mistake number 6, expecting 2008 to repeat. Different buyers, different loans, different equity, different regulations. Mistake number 7, ignoring demographic tailwinds. Retirees and near retirees create stability analysts rarely model correctly.
Now let's give the combined forecast metro by metro. Based on CoreLogic, Zillow, Redfin, Moody's Analytics, Florida Realtors, local economists, and migration models. This is not our opinion. This is what the data shows. Miami-Dade, plus 3 to 7% appreciation. Naples, plus 2 to 6%. Sarasota and Bradenton, plus 2 to 5%. Palm Beach County, plus 3 to 7%. You're looking in Tampa Bay, negative 2 to plus 3%. A true stabilization market. Orlando Metro, negative 1 to plus 3%. Jacksonville Metro, plus 1 to 4%. Space Coast, plus 1 to 4% also. Pensacola and the Panhandle, negative 1 to plus 2%. Tallahassee and Gainesville, flat to plus 2%. Cape Coral and Fort Myers, negative 3 to negative 7%. Port St. Lucie, negative 2 to positive 1%. Daytona and Deltona, negative 1 to positive 1%. These are the combined analyst ranges, not hype, not fear, actual forecasts.
Florida is not on the edge of a crash. Florida is entering a reshuffle. Strong metros climb, stable metros flatten, a few metros dip, but the state stays stable. Florida biggest price risk isn't economic, it's hype. People hear insurance crisis and assume collapse.
Yes.
People hear migration slowing and assume reversal. People hear overvaluation and assume bubble. We hear that all the time. The real data tells a different story. Florida is shifting from a hyper-growth cycle to a normal cycle. Normal is good. Normal is healthy. Normal stabilizes prices.
The message viewers need to understand is this. You don't need to fear the Florida housing market. You need to understand the Florida housing market. This market rewards informed buyers, not emotional ones. So make sure you buy in the right zip code, buy with the right expectations, buy with the right strategy, understand insurance, understand inventory, understand demand pathways. Florida's not crashing. Florida is recalibrating.
And if you're planning to buy or sell in Florida, from Miami to Jacksonville, from Tampa to Orlando, from Sarasota to St. Augustine, you need someone who actually understands the laws, numbers, and market behavior during these trends.
We can help with that. We live this data every single day, analyzing numbers, tracking trends, talking to buyers and sellers across the state, walking neighborhoods, following new construction pipelines, watching insurance shifts, seeing real offers and real behavior, not just headlines.
And now we'll tell you who we are. We are Team Heather and Danielle with Momentum Realty, your trusted Florida real estate experts. If you found this helpful, hit subscribe, drop your questions below, and we'll see you in the next video. Florida real estate doesn't have to feel confusing, not when you have the right people guiding you.